From ancient coins and seashells to paper bills and digital wallets, money keeps evolving. Today, the global economy leans almost entirely on fiat currencies, money that's not backed by anything except for trust in governments. In 2009, another form of money emerged, Bitcoin. But will it dethrone fiat? Let's quickly remind ourselves, what is money? Money serves as a medium of exchange, a unit of account, and a store of value. Good money should be durable, portable, divisible, uniform, widely accepted, and limited in supply to preserve its value. Not exactly the easiest task. Throughout history, we've seen many different kinds, some working better than others. Early societies used commodity money, which are items with intrinsic value, like gold, silver, salt, and even seashells. But as trade expanded and economies grew, carrying around heavy commodities like coins or salt became inconvenient. So representative or receipt money emerged, paper notes redeemable for gold or silver held in vaults. However, the United States ended gold convertibility in 1971, meaning most of the world shifted to fiat money, money backed by nothing but the word of governments and collective trust. Fiat still met many of the criteria for good money. It's built to last, easy to move, and comes in standardized divisible units. The trade-off? Fiat money can be easily devalued, like in Weimar Germany or Venezuela, where banknotes quickly turned into worthless piles of paper after massive money printing. Bitcoin, on the other hand, can't be devalued by central banks. Its supply is fixed at 21 million coins, and no single authority controls it. Bitcoin's ledger lives on thousands of nodes worldwide, and as long as you're connected to the blockchain, you can move it anywhere. Each Bitcoin also splits into 100 million satoshis, where every satoshi is equal and interchangeable. Adoption is also steadily growing. Thousands of merchants already accept Bitcoin, and second-layer solutions like the Lightning Network are making micropayments faster and cheaper. Still, most treat it more like an investment asset than for everyday spending. The main hurdle for now is volatility. While price may stabilize in the future as adoption grows, Bitcoin's swings currently make it unpredictable and difficult to price goods. And here's the other thing. Bitcoin's fixed supply makes it inherently deflationary if demand continues growing. Economists often warn that deflation can freeze demand, encourage hoarding, and make debt harder to repay. This can stall economic growth and trigger recessions. That's why most modern economies target around 2% inflation to stimulate spending and erode debt. But this means inflation quietly shifts wealth from savers to borrowers, hurting those who save and helping those who borrow. And who are the biggest borrowers of all? Governments, who then benefit by paying back debt with cheaper money. Bitcoin flips that logic. If Bitcoin became the world's currency, its scarcity would reward savers, but could slow business and discourage lending. Bitcoin lending would be possible, but unlike fiat, you can't just print more of it. That means any yield has to come from real economic activity and not from artificially low interest rates or easy access to newly created money. That makes lending more conservative, often over-collateralized, and likely less profitable than in today's credit-fueled fiat system. On the flip side, borrowing and taking on debt could feel riskier in a world where capital is tight and money gains value over time. But maybe that's not such a bad thing. A system that favors saving over debt could mean more sustainable growth and force governments, businesses, and individuals to spend more responsibly. But that's a whole discussion for another day. So, Bitcoin checks most good money boxes. It's scarce, durable, portable, and divisible. However, its volatility and deflationary nature make it challenging for everyday use. So in a world where fiat continues to dominate, Bitcoin may remain more digital gold than digital cash, a long-term store of value for the internet age rather than everyday money. But maybe the real question isn't whether Bitcoin can replace fiat, it's what would people trust instead if fiat fails? If the system breaks, we'll need money that doesn't rely on trust, something resilient, scarce, and decentralized by design. Curious how fiat is managed behind the scenes? Check out our video on the Fed to learn how it all really works.